Crypto.com, Coinbase, Binance, all these companies are on fire, and not in a good way. We've done about 5 days worth of investigation, and we're treating it like a stock to try and figure out what's going on with these guys, and we've found a lot of really bad things.
They're going down worse than my bathroom after a bean burrito.
Exactly, and that's not pretty.
We believe these guys are going bankrupt, and how do we know that? We got it.
Got the 10Q on those bad boys.
Yep.
Since Crypto.com and Coinbase are both public, we can dig up some information on them. Binance, on the other hand, since they're a black box, spiral abyss of negativity, we can't actually get to their finances.
We can't get to their finances to a certain degree, but there's enough evidence that we're pulling from everything that the executives have said to the back and forth between them and their competitors that we have got a pretty good idea, and we're going to get into that.
For now, we want to focus on Crypto.com and then go to Coinbase. And keep in mind that we did not do a year-long expose on these companies like CoffeeZilla going after Logan Paul and Sam Bankman-Fried. He went way in depth. We did not do that, but there's enough evidence here that points to their downfall.
There's enough happening here, and we know enough people that are invested in crypto that we feel that you guys need to know this.
Right.
And you need to know what's happening because it hasn't happened yet. And we're about 99% sure 2 out of the 3 are going to definitely go the way we're talking here.
Right.
We get into what's happening with Crypto.com. There's a form called the 10Q that is required by companies to report on a quarterly basis. You can pull that up from the SEC.gov, and we have the one from Crypto.com, and we have the one for Coinbase. And we're going to cover a lot of the stuff with Coinbase because Coinbase is the largest one in the United States. Crypto.com is a little bit smaller, but their numbers are pretty self-explanatory.
Still big.
They're big, but they're just really bad. We'll show you everything that's going on with their net income / loss, their revenue losses, the fact that all 3 of them are leveraging their entire company based on the cryptocurrency itself.
That's awful. You don't be Ford and then leverage your entire company on the costs of the materials that you make your cars with.
Right. Crypto.com is probably the worst out of the 3 that we can tell, and we're going to cover this one much more briefly than Coinbase just because the numbers are just so bad.
Right.
They're really bad. To get into their net income loss, what you look at is this is a company that is over leveraged. To pay off their current obligations that they have, they're issuing new obligations at higher rates, and they're doing derivative contracts and options to kick that bucket down the road. Now, the problem is they're losing so much cash flow right now that they can't keep doing that. And we're talking within a year. They themselves said in their SEC filing, there's a significant risk to continuing operations. They said that, not us.
Right.
So as you see these financial numbers from Crypto.com, you're going to find out that this is just the tip of the iceberg. You can do an investigative research on it, you can dig into it further, but the numbers don't lie,
right,
folks.
These are all publicly held companies. You can look at it. As long as you know where to look, it's there. The numbers look like Crypto.com is going to go bankrupt this year.
Very soon. So are we saying crypto itself, as people believe it's a commodity of exchange, do we think crypto and its function is going to go away? No, but the exchanges are going to have some problems.
These are just the companies. Don't panic yet. But if you have stock in any of these companies, then you really need to look at it.
Right. That's Crypto.com. We posted all these numbers there. I didn't want to cover them in brief because it's just so bad. The one that's a little bit more murky is Coinbase. Coinbase is a bit of a conundrum because when you first look at it, at very first glance, it's like, oh, they got lots of cash flow. Where did that cash flow come from? When you dig into it, derivative contracts, issuance of stock, paybacks of loan. I mean, they're not getting their cash that they say they have from the US dollar. They're getting it from crypto.
Right.
And that's the big risk. If you're in a crypto winter and crypto's dropping and your cash flow and your valuation of your company and even the liabilities against your company on their derivative contracts is based on an asset that's not stable,
right,
that's a problem.
They're borrowing from Peter to pay Paul on this one, and it's kind of like paying off a credit card with another credit card. Eventually, it's going to catch up to you, and you're going to have to pay it all back.
And here's a huge thing for people who are learning how to invest. If you're buying a company that's struggling, let's say they've got net income loss, and this company lost from their net income from 2021 to 2022, there's almost a $5 billion difference. It's like $2.7 billion. In fact, let me just go through some of the numbers here. Their operating expenses were $4.8 billion in 3 quarters. Their total revenue is $2.565 billion. Now think about that. That's their total revenue. Their operating expenses are $4.8 billion. So that means they had a net loss of $2.067 billion. They're insanely leveraged of over $3.4 billion of assets. And of their customer assets, they have about just under $100 billion, $95 billion in crypto customer assets. Their customer liabilities are up from $10 billion to $101.5 billion. It just keeps going and going. The total liabilities are $135.65 billion, which is a 7.1 times increase over previous year liabilities. Their assets have only increased, meanwhile, by 5 times. So their cash flow at the beginning of the period went from $17.6 billion down to $11.6 billion. So let's look at that. If their cash flow is dropping by $5.6 billion in the quarter of 9 months, so the first 9 months of the year, and they go from 17 to 11 and they can't issue any more debt easily. They're getting downgraded on the ratings, so they can't just go to a bank and say, hey, give me more money. So they went from 17 to 11. When they go from 11 to 5, you are 9 months away from, this is the report is in September, and from what I heard, they lost over $1 billion in November too. So,
right.
So you're, it's coming true. So we've got 9 months. So the fact that they got $5 billion, and then maybe not even that, but maybe after that they've got another 6 to 9 months, and then they're out.
But you got to look at also
on those numbers.
How do they get their money other than the securities?
Yeah.
They get it through transaction fees. So people trading on their platform, there's gas fees and there's other type of transaction fees that they get money from, and that's where their revenue comes from solely.
100% of it.
What you're finding also is that a lot of quote unquote whales have pulled money out of Coinbase, moved it to other places, sold just in cryptocurrency itself. Now that transaction that they would have been making are all gone. And these are some of the largest people making transactions on their platform. So they're losing money that way as well.
I have to give them some credit though. It's pretty unusual to see a company be that honest about their finance. If they're gonna go down in flames, at least they're honest about it. They're like, yeah, we're in trouble.
Yeah.
The other thing that just floors me about this is all of the legal things going on with this company.
There's a lot.
There's a lot. We could go into a whole video just talking about the investigations that are happening from the SEC to the state of New York to the attorney generals to the lawsuits happening. And they actually admitted in their filing that they said, hey, this is causing significant headwinds. In fact, they said themselves.
This is right from the report, the 10Q. So keep in mind that this was going on before the FTX collapse. So it's not because of the FTX collapse, but there's a lot more attention due to that.
This is what they said. The market price of our Class A common stock may be volatile and could decline significantly and rapidly. Market volatility may affect the value of an investment in our Class A common stock and can subject us to litigation. They are in litigation already. They're admitting that. Next, they have the filing report on page 105. We may not be able to generate sufficient cash to service our debt and other obligations, including our obligations of the 2026 convertible notes and senior notes. Now, if you're not familiar with what a derivative contract is and a convertible note contract is, derivatives basically say, hey, I'm going to sell you this car and I'm going to have you pay me this amount for this car in the future at this predetermined price, and the person would agree to buy it. So let's say, hey, Brian, I'm going to sell you my car next year. I want to sell it to you for this amount of money, and you say okay, and then the transaction goes through. When you look at their derivatives and you look at their convertible notes that they issue, convertible notes are similar in that way. They say, hey, we're going to issue this to you in a future date, and you're going to notice some problems. They don't have enough cash flow generated to pay that stuff, and they admitted that. In addition to this, they've also said, we have a substantial amount of indebtedness and other obligations which could adversely affect our financial position and prevent us from fulfilling our obligations under the 2026 convertible notes and senior notes.
i.e. we are not going to have enough money to pay those people.
So like I said, I got to give them some credit for saying that.
Yeah.
that's
They didn't sugarcoat it. They didn't try and spin it. It's just, here it is.
It's mind-blowing. It's just mind-blowing to me that
like, hi, you can't sue us over this. It's not fraud.
They keep going. We provided secured loans to our customers, which exposes us to credit risks and may cause us to incur financial reputational harm. And it says again, we are exposed to transaction losses due to chargebacks, refunds, or returns as a result of fraud or uncollectability that may adversely impact our business, operating results, and financial condition. And it also says the big one, our condensed consolidated balance sheets may not contain sufficient amounts or types of regulatory capital to meet the charging requirements of our various regulations and regulators worldwide, which could adversely affect our business operating results and financial conditions. This is a company that is admitting they're in trouble. Why? Why is it all of a sudden happening? Well, the problem is when you look at their asset sheets and you look at their liabilities and you look at how they leverage their debt, because it's a crypto-based company and people believe that this is a commodity of exchange, they leverage themselves against the valuation of their crypto. It shows up in these reports. You can see that, hey, we've got this amount of crypto and we leverage the company's assets against that. And as the crypto value goes down, so do they.
And it's mainly Bitcoin and their coin.
This is why if you're trying to create a new commodity of exchange, you need to weigh it against the commodity of exchange that people are currently using. They didn't do that. And that's why this is creating a problem. Now, could they come out of it? Maybe.
There's a chance, a very slim chance.
So you're telling me there's a chance? Yeah!
But there's a chance because they still have some cash left. And it depends on what they do in the next probably 2 months.
About a year and a half at the current trajectory. If it accelerates, it's going to be less. If they are able to find new issuance of debt, or if they're able to get more investor activity into that might go a little bit longer. Maybe they'll get gobbled up by Binance. I don't know. Binance is a bit of a black box that way. We'll talk about that in a second. They're in trouble. So if you have crypto in Coinbase, be careful with it. You can put it in an external wallet, you can go somewhere else with it, but just so you know, these guys are on a ticking time bomb. If you have it in crypto.com, get it out now.
Yes.
Right now.
Yeah, use a different wallet. And even Coinbase, you can use them as an exchange. Buy, sell, transfer, use it as an exchange. But when you're done, transfer that into a safe wallet, either a software or hardware wallet or a safer exchange wallet.
These companies are being investigated. Now, Binance is the one company that is not publicly traded, but there's been enough evidence from the CEO that he's talking about, how he makes his money, how he does the business, what their income comes from, that you can generate a pretty good opinion. So the next thing that we have about Binance is, this is not factual. Coinbase and crypto, that's fact. That's on their financial report. We're just showing you what's on the financial report. Binance, though, they're not public, so they don't have to tell us anything.
It's an educated guess based on the numbers that we do have and based on how they get their money. And it's basically through transactions like the Russ.
The CEO Zhao said that it was 90% of their income comes from the transactions. That's the same thing that crypto.com and Coinbase do. So if he said that, and they are issuing valuations based on their assets and in crypto, not dollars, in crypto, and those assets are going down a lot, well, you can probably surmise just based on those things that Binance is in a similar position. And there's enough news articles out there where you can catch glimpses.
Yeah.
When they poke at Coinbase, you can see, oh yeah, they've got $500 billion or no, 535 billion worth, no, or million. How many crypto coins do they have?
They had 600,000 Bitcoin, and if it was at the peak, well, at the peak, not like the recent peak of like 19,000, that's about 40 billion in assets, just in crypto alone. They say they have 2 million in reserve, but there's no way of actually knowing that. If they have a fraction of what they say they have, then it seems like they have enough actual cash to maybe outlast the rest of them. And if crypto turns around and the economy turns around and they get investors, Binance may come out of this and survive. But that's a big if.
That's a very big if.
Because we don't know. And unless they come out with their finance and say, yes, this is exactly what we have, here's the report, and it's auditable, then yeah.
They did that. There's an article where they said, boom, transparency auditing, and Reuters came out with a report where they've been trying to get people on their staff to go and figure out the finances of Binance, and they they won't tell them anything. In fact, when they did their audit, it wasn't on their the dollar valuation, they did an audit on their crypto.
Right. The Bitcoin that they're holding.
That's not an
their
audit.
Coin. It's like, yeah, it's not an audit. And the auditors came out and said that this isn't the audit on their financial liquidity. It's an audit on their crypto and how much they have in holdings. And the actual investigation company took it down because they felt that people were misreading and misunderstanding the report.
And misrepresenting it. And the CEO was saying, yeah, it's great, it's transparent. It wasn't. If you want to instill confidence in investors and the ability for your company to be liquid and cash and be able to produce a good value for your customers, you're going to show the numbers.
Right.
They don't do that. And remember, they're in the same business as Crypto.com and Coinbase, and we see those numbers. We just looked at them. Binance isn't showing us that stuff. The stuff they show us is kind of a sleight of hand. Don't pay attention to the guy behind the mirror.
Oh, pay no attention to that man behind the curtain.
Pay attention to what we're showing you. And we don't know what's going on behind the scenes, but we know enough about what's happening in the industry as a whole to know that they're probably not telling the whole story.
And in all intent and purposes, the way they do their business looks very similar to Crypto.com and Binance and FTX and the rest of them, Genesis. So they're subject to the exact same issues that they have. They might have more cash to be able to weather the storm further.
I hope they do.
But the one thing that they do say that kind of differentiates them, and a grain of salt, they say they're a software company and not like an exchange. So if it's a software company and they have a product because they're a software company, that might position them into a better place if they're making money on that. But there's absolutely no way to corroborate that.
There's no way to, because they're not regulated in that same kind of capacity as the other two are. And that's what's scary about it. So if you've got currency on these exchanges and you trust the exchanges, go ahead and keep it there. But if you want to protect your crypto, I would suggest putting it in an external wallet, somewhere else that might be financially safe. And
now, why do we say that? Because of Celcius and FTX. If you have your money in a wallet and that company goes bankrupt, it gets seized. You can't withdraw. You could put money in, you still maybe getting interest on that, but you can't withdraw it. So even like Celcius, you still can't withdraw your money, and they're going through bankruptcy and they're trying to get how much money they have and how much they have to give out, so we may actually get our money back for that in actual dollars. But that's the problem. If you've got most of your wealth in Coinbase and they go bankrupt and that all gets seized, you can't take that out. Now what are you gonna do?
You're stuck.
You gotta wait.
Now, what would make us positive about this? There's a few things. The Fed has come out and said that they're going to develop their own crypto. Now, if you understand anything about how the bank communicates financial transactions between banks at the end of the day, you'll see quite a few correlations of the crypto industry. I'm not going to get into that. I won't bore anybody on that. I used to do bank audits, so I know how the system works. It's the parallels are amazing how similar it is.
I swear to God, if you get into modem transactions, I'm deleting it.
But everybody wants to know about token ring and RFAQ.
Dude, so anyway.
What would make us positive? If the Fed says they're going to regulate it, crypto's going to go through hell and back, excuse my language, but they're going to go through quite the ordeal. And whoever's left standing might be okay because then they're going to tether it to this number. Now, this might be a credit to Coinbase's honesty. That might help them in that environment. We don't know. Some of this is speculation, but a lot of it's based on the numbers. And when we invest, again, go watch our other videos. We do a stock per month. We started over for everybody here, for all you guys, and we've done quite well in beating the market. If the Fed says they're going to regulate that and there's somebody left standing, and there's an actual, like a banking system transaction tethered to it, crypto might have a pretty good use case, especially when you're talking about wires internationally. There's some use case for that. But until that happens, don't gamble your money. Just don't do it. Be careful with it. If you're going to invest in a company and you want to make sure that company is stable, you need to make sure that that company has its assets and the product they sell to their customers is valued based on a stable currency, and it's something people need, because then they could have a bad financial year, just like Coinbase and Crypto.com and Binance. They could have a bad year, and the product that they sell to people that need that product will overcome that. In this case, these entities don't have that. It's not regulated. In fact, they even said that you could lose it all. It's in the report. You could lose it all because none of this is regulated, none of it's governed. If the Fed decides and the US government decides, or even the IMF or the central banks decide that they want to regulate this, then we've got some transaction protection, then it could be a viable asset. But until then, we're not there yet, people. It's not there yet. So hang on and be careful with your investment.
Yeah.
If you think crypto is a good investment, I have some Cardano. Not a lot, it's like a couple dividend checks worth, and Brian's got some of his own. Put it in an external wallet, wait for this mess to settle down, then maybe put it back into whoever's left standing at the end of the day.
Crypto is probably not going away, but the exchanges, crypto.com is most likely going away. They're probably going to go bankrupt, and they're going to go
soon.
Maybe not the route of FTX. It depends on how much fraud and illegal acts they've done, like Sam Bankman-Fried that took all their money and spent it. Why? I don't know. But Coinbase, if they could pivot and actually make a product and restructure, there's a small chance that they come out of this and be better for it. Binance,
really small.
Binance really needs to look hard and change how their model is now. If they have the money that they say they have, that they could pay off their debts and weather the storm and their money goes down.
I still can't believe that these guys are evaluating their company and their assets, and it's not publicly audited, so they can't, it's not actually validated, but they're valuing it based on crypto.
Based on Bitcoin.
Based on the crypto itself. That's you don't do that.
That's why companies invest in things, real estate, research, and all sorts of things to leverage their business in another value system, so that if their business goes down, they still have the assets that they could sell to weather it.
Again, if you're looking to protect your assets, talk to your financial advisor, watch the channel on some of our previous stock month purchases. We go through that, and what we buy companies that basically people they need the products. So regardless of whatever the currency is, if it really is crypto, if you need to buy soap or nuts and bolts or whatever else it is that we
toilet paper,
if you need to buy these products, whatever the currency is will be used to buy that produces value. You need to buy companies when you're starting out that have products that people need.
Right. And especially with the upcoming recession, those companies are going to do pretty well.
I think we're in it. I don't think it's upcoming. I think it's here.
Okay, when the recession gets worse, it's still going to go down.
We in it, folk. Yeah. I hope this was concise enough. There's only a few days of research, and this is over 100 pages. There's a lot here. We're going to put the link in the bottom. You can look at it yourself. You can troll me to death if you want. Brian and I have done this for 20 years. We're relatively successful, and we saw some red flags, and we warned the people that we know personally, hey, get out of the exchanges. You could sell your crypto if you want, or put it in a wallet depending upon what you believe. But in this case, we're just trying to look out for people. And if you work at these companies and you want to provide us some information, please do that. We have nothing against the business or Binance, Crypto.com, or Coinbase. We have nothing against the companies. We're just looking at the numbers. It's just the numbers. We have a purchase we do every month. So take a look. Every month you'll see we're on month 10 this month. We're gonna have a stock that we purchased. We also have comments from people who want us to review certain stocks. So we come out, we look at certain stocks. We've done Tesla, and to beat the dead horse a little bit more, we did the video on Tesla. We told people to sell. It got cut in half. We did the same thing with Zim. Zim got cut by 3 times. We did Jeppy and talked about their dividend. The dividend, the Jeppy is okay, but the dividend isn't. That's an introductory dividend, that's not a full dividend. Everything that we talked about in our past videos, it's actually happened. Doesn't mean we're right all the time, but we know enough after 20 years of doing this to know that there's certain things you look out for, and this is one of the things that we felt, hey, you need to know this now.
Follow the money, people.
Follow the money.
Follow the money.
Yep. And whether or not you like us, hopefully you do, hopefully you subscribe, and hopefully we can keep providing you value as this goes on. So thank you for watching.
Yeah. Thank you for watching. Keep watching our videos. Watch whatever this is here. It'll be a video. And as always, happy investing.